Hello traders, hope you're doing well. In this video, I'll be discussing with you a very powerful option buying strategy. Now this strategy requires only 30 minutes of your time. You will execute the trade around 9:30 a.m. Maximum by 10 o'clock you will be closing the trade. So there are many working professionals who do not have time to spend in the market. So at least this 30 minutes if you are able to spend, you can take advantage of this strategy. Now second interesting thing about this strategy is you don't have to look at charts at all. Only based on the premium chart, as per the rule, whichever strike price is giving you entry signal, you'll be executing the order in that particular strike price. Now the third advantage of the strategy is risk is less, reward is more. Minimum with the strategy, we will be getting 1:2. So you guys know, if you take 10 trades, even if the success rate is 50%, 5 trades you make loss, 5 trades you make profit, but risk reward if it is more, 1:2 or more than that, definitely you will be profitable if you calculate overall for that 10 trades. So that is one advantage. Now this strategy was taught to me by one of my friend. He's having good success rate, 70 to 75%. So 50-50, if you make profit only, if risk reward is more, it is good. In this case is getting 70-75% on an average month on month basis. Even I started doing the back test. For me success rate was good, so I thought it would be very interesting if I teach you the strategy so that you can back test it at least for 1 month. Once you see the results, if you're happy with the results, then you can start using the strategy so that you spend very less time in the market. So that is the whole idea. I don't want to waste any further time. Let us just start with the rules of the strategy, which is very important. To get the success rate, you have to follow the rules. Now traders, the first rule of this strategy is morning 9:25 a.m. you need to open Nifty's current expiry option chain data. Option chain data will look somewhat similar to this. I'm using Sensible. Whichever broker is providing you this information, you open Nifty option chain data for the current week expiry. Now once you open Nifty option chain data at 9:25, you should not open at 9:15, 9:20. No, exactly at 9:25 you have to open Nifty option chain data for the current week expiry. Now traders, once you open the option chain data for the current week expiry for Nifty, what you will do first, you will observe Nifty. Where is it currently trading at? As of now, I'm recording this video after market closing to explain the rules to you. I will give you one live trade example also. You see that you will get better understanding. First, only rules we are going to follow. So what you will do, morning 9:25 a.m., not at 9 o'clock, 9:15, at 9:25 a.m. You will come and see current market price of Nifty, and then you will see which strike price is closer to the current market price. In this case, 24,500 is very close to 24,485. So this is our at the money strike price. Now the goal here is from 9:25 a.m. if you observe on the call option side, any one of the in the money strike price will be trading very close to 180 rupees. It can be trading at 165, 170, 175, but one premium will be always trading very close to 180 rupees, and that strike price will usually be in the money strike price. What you have to do, you have to select that strike price. Now imagine market is open, you will look at a call option strike price which is trading very close to 180. Here if you see 24,350 is very close to 180, so this call option strike price you will choose. Same way what you will do in put option side, definitely 99% of the time there will be one strike price which is trading very close to 180 rupees. So you will start seeing which strike price is trading close to 180. Here you can see 24,650 strike price is trading at 172. So this is very close to 180, right? So this strike price you will choose. So basically what we have done on the call option side, one in the money strike price we have chosen, which is 24,350, because it is trading very close to 180 rupees. And on the put option side, we will be choosing a strike price, in this case 24,650, because this is trading very close to 180 rupees. It's trading at 172. So these two strike price you will add to your watch list. So you will keep observing these two strike prices, and this you have to start looking only at 9:25 a.m. Please remember that. So we are getting ready for the strategy. So what will happen is closer to 9:30 a.m. Closer to 9:30 a.m. any one of this in the money strike price, it can be either put option in the money strike price or call option in the money strike price. Any one of it will break and start sustaining above 180 rupees. Either it can be call option or put option. Whichever breaks 180 price level first, that strike price, without thinking too much, we will take entry. I hope you have understood this. If you observe, I've not looked at the chart, I've not asked you to look at the chart also. Only premium chart we will see. Whichever is trading close to 180 rupees, we'll keep observing. Either call option or put option. Whichever breaks 180 rupees and starts sustaining that strike price, we will take entry. Now, once we enter the trade at 180 rupees, sometimes it can be 181, 182 also, but very close to 180 we have to take the entry. Now for this trade, the risk is already decided. Okay, imagine you're taken a call option. It was trading at 180. As soon as you saw that around 9:30 a.m. you executed the call option trade. So this strike price, as soon as you enter, immediately you will place the stop loss, or the stop loss for the trade will be 20 points. Okay, so if market is trading at 180, if you keep stop loss of 20 points, then what time you have to exit? If market goes to 160, after you take entry at 180 rupees, immediately you have to keep 20 points stop loss. So by chance, this 24,350 strike price from 180, if it goes to 160, without thinking too much, you have to close the trade. Or traders, you might have a question. You might ask me, sir, why are we choosing a strike price which is very close to 180? The first reason is almost all the time, whichever strike price is trading near 180 price level, this will be an in the money strike price itself. So in this case, 24,350, it is an in the money strike price on the call option side, right? We will be choosing an in the money strike price which is very close to 180. One advantage we have by choosing in the money strike price instead of at the money strike price is the delta value. You can see the delta value of this particular strike price will be more than at the money strike price. As per my observation, my backtest, as per the data what I've got from my friend, when we choose a strike price which is trading near 180 and we take entry as soon as it breaks 180, that is giving us very good success rate because delta is kind of more than at the money strike price. So by chance, if market quickly starts moving, let's say Nifty moved up by 10 points, since it is in the money strike price and delta value is more, this strike price will at least move by 7 to 8 points. Okay, so our goal is to capture quick momentum in the market, 15 to 30 minutes maximum. We are going to enter a strike price which delta value is kind of high. Usually we will choose a strike price which is currently trading at 180. We will be executing the order at 9:30 a.m. Now once we execute this order, our entry is at 180, stop loss will be 160 and target will be 220. This will be the minimum target for the trade. So if you calculate as per the risk reward ratio, stop loss is 20 points, target will be 40 points. This is the maximum risk, but this is the minimum profit. Now sometimes after you enter the trade, I have noticed 6 to 7 times I would have kept minimum target as 220, but market will be very quick and it can reach 260, 270, 280 also. So that additional move, whatever you get, that is your bonus. If you are able to capture it, you can capture. If not, at 220 price level, you can exit from the trade. As a beginner, when you're doing the back test, your risk reward should always be the same. Risk is around 160 price level, entry is around 180, target is 220. So after you do the backtest, keep observing how many times market has gone above 220. It is sustaining about 220. Then you will get better idea as to if you hold on to the trade, you will have a chance of making 1:3, 1:4, 1:5 also. Many times this has happened. Traders, by now you know we are going to execute the trade at 9:30 a.m. whichever strike price on the call option side or put option side, whichever is breaking 180 level first, we'll be entering a trade in that particular strike price. Stop loss is 20 points, so stop loss will be around 160. Target will be when that particular strike price goes to 220. 1:2 is the risk reward. Now in this particular trade, to get good success rate, you don't have to wait too long. If the market needs to give you profit by 9:45 a.m. itself, most of the time it will give you profit. Okay, so basically 15 minutes. Within that 15 minutes, either we are aiming for 220 or we will be taking a stop loss near 160. Entry is near 180 level. Either we stick to 40 points target or we exit at 20 points stop loss. Most of the time, as a beginner, I would suggest you to close the trade at this time. Now by chance, at 9:45 a.m., let's say market did not reach 220 also, it did not go and hit your stop loss at 160 also. That time, as a beginner, what you need to do is, without thinking too much, either you will be 1500, 2000 like that profit at 9:45, you have to exit from the trade, or maybe you will be seeing a loss of 1000, 1500, whatever it is. That stop loss you have to take and close the trade. For majority of you, at the beginning stage at least, do not hold on to the trade for more than 15 minutes. Entry is at 9:30 a.m., exit at 9:45 a.m. But once you gain experience, what you will understand is you have a chance of waiting until 10 a.m. also. But you will be doing that only if your position is in profitable situation. For example, you entered at 180 at 9:40 a.m. Let's say market is trading somewhere near 190 or 200 level. Only 20 points profit you got. That time what you will do, you will trail the stop loss. Where is your stop loss? Stop loss is at 160 rupees premium, right? So you will bring your stop loss to 180, which is cost to cost, and then you will hold on to this trade. So either market will hit 180 level or it will hit your target of 220. Until then you have to wait. So by doing this, what you have done after 9:45 a.m., if you're not reaching 220 target, you are bringing your stop loss to cost. So this trade becomes a risk-free trade for you. By following these rules, we have seen 70 to 75% success rate in the strategy. If our trend is correct, if market also wants to move that way, since we have taken 180 strike price, which is usually or always will be in the money strike price, we might be able to achieve our target very quickly. At the same time, we will be able to get more targets also. I hope you're getting the point as to why we are using 180. As per the backtest, that particular strike price compared to other strike prices is reasonably priced. At the same time, delta value also is reasonable. That is why we are choosing the strike price. When we tested the strategy based on 180 premium, that is working out well. That's why I'm suggesting the same premium levels for you. Whichever strike price is trading at 180 rupees, at 9:30 a.m. we need to execute the order and take the trade. Now you will be seeing a live trade which I took today itself, 12th of August. Look at that live trade, you will get better understanding. But please, after looking at the strategy, quickly don't put your hard-earned money in the market immediately and start trading from the next day. Please don't do that. Backtest for 30 days. Only if you are getting the result as per what I have told in this video, then you take the trade. Okay. From many days I wanted to give the strategy. It was pending. I have given now. Now you know the strategy. If you see the live market example, you will get better clarity. If you have any further doubt related to the strategy, please mention that in the comment section. We'll look into it and we will try our best to answer. Not just this live trade, at least 4 to 5 more live trade examples I'll be sharing so that you will come across all kind of situation using this strategy. Alright, for me it's worked out. I've shared with you. You can now see the live trade which I took and then decide if you are ready to backtest this strategy for the next 30 days. Okay. Now traders, before you see the live trade example, you can see 8th of August in the group. I had discussed, saying that these two are the strike prices I'm looking at based on 9:30 a.m. strategy. On Friday, we got very good profit in the strategy. But on Monday, my stop loss got hit. Okay, as per the strategy. Tuesday trade is what you will be seeing right now, only because that is the one which I have recorded. So whenever you are having confusion about which strike price to choose and things like that, whenever I'm looking at the strategy, definitely I will share. So if you're interested, you can join the group. Now let's look into the live trade example. Today's date today is 12th of August. As of now, time is around 9:26. Now at this point of time, market is trading somewhere near 24,600 range. At the money strike price is 24,650. When I notice there are two strike prices. One is 24,500, which is trading very close to 175 range, and I have a put option which is 24,750, which is trading near 166 range. So my idea as of now is to add these two strike prices to my watch list. Why I do this? Because they are very close to 180. So I'll go here. Simply what I will do, I will add this position 24,500 call option. I'll add this to my watch list, and then which strike price we had, 24,750. So 24,750 put option I will add. Both are for the current expiry itself. Now once I add these two strike prices, I will observe these charts. Time as of now is 9:28. Now whichever strike price close above 180, I'll be looking for an entry in that particular strike price. 24,750 put option is currently trading at 168, and 24,500 call option is trading at 170 to 173. So whichever strike price sustains above 180, then I'll be taking trade in that particular strike price. Now as of now, both are trading at somewhat similar range itself. Basically we need to execute this order by 9:30. So by 9:30, 9:35 maximum, whichever strike price sustains above 180 zone, we'll be taking that particular strike price. I think put option is kind of spiking up a bit, so little bit I'll be ready to place an order. Usually people will set trigger orders for the trade, but I'm not doing that right now. I'm just going to place market order itself. So I'll just observe 180. If this breaks, I'll enter. 180. If this one breaks, again I will enter. So call option has broken 180 zone, so I'll be taking some positions there. So somewhere near 180 I have got the trade, and my stop loss will be just 20 points, somewhere near 160 zone. And target, maybe we can try minimum as per the rule, 40 points is the target. So our idea is to hold on to this trade until 9:45, and by that time, if market achieves our target without thinking too much, we will be closing. Okay, that's the plan. As of now, there is indecision between the buyers and sellers. Call option 24,500 is still holding on, sustaining at the same price level. So quickly another 40 points from the current zone if we get, we will try to capture that and close the trade. Just for the reference point, very less quantity only I have taken, around 300. But at the initial stage, I will suggest people to trade with very less quantity, or please do paper trading. There are many platforms. You can go there, do paper trading, do it for at least 1 month. Only if you get confidence, you're happy with the setup, then maybe you can take the trades. That too, you have to start off with very less quantity. So real market condition, instead of giving the strategy how it actually works, that is what I'm trying to demonstrate to you guys here. So basically the risk reward for this trade, if you have entered at 180 zone, then 220 is 40 points target, 160 zone is 20 points risk. That is what we are currently aiming with the strategy, 1:2. So in this 1:2 risk reward, let's say 5 days you made profit, 4 5s are 200. So 200 points you will be able to capture. 5 days you lose also, you will be losing 100 points. 100 points net to net. How much is 100 points for one lot? 75 into 100. So close to 7,500 rupees per lot is the minimum expectation that we have with the strategy. Okay, if you increase the lot size, your profit also will increase. That is a different story. Basically, every time you target 40 points, this is the minimum profit that you can make. Sometimes what happens is, instead of giving 40 points, it will give you 60 points, 80 points, 100 points movement. Because in this, we are not looking at charts or anything. We are just executing the trade based on the strategy. And we will be closing the trade also by 9:45. That is how the strategy works. Sometimes me holding on to the trade post 9:45, it has given good profits also. At the same time, there are some losses also. So net to net at the initial stage for this strategy, the idea is to close the trade by 9:45. At 9:30 we need to execute, 9:45 we need to exit. So the trade timeline is just going to be 15 minutes. So working professionals, if you look at the strategy, backtest for 1 or 2 months, and if it's working good for you, simply you can implement this in your daily trades. But whatever it is, risk is involved. Without doing backtest, without you getting confidence, never ever jump into any trades which anyone suggests, because there might be some days continuous 4 days, 5 days, you will get loss. So to get a proper feeling, definitely backtesting the strategy for at least 1 month is important, so that you will come across all kind of situation. Time as of now is 9:39. This market has not given us any kind of movement. So based on the strategy at 9:45, wherever market is, okay, you ideally have to close the trade. It might be at 1,000 rupees profit, 2,000 rupees loss. Without hitting the stop loss, market can just be sideways. That time you might have to close the trade. Okay, that is the basic rule. Another 5 more minutes we will wait and observe if market is either giving us the target, stop loss, or it is just trading within a range. Based on that situation, we will decide what to do next. As of now, we are just at cost to cost. Okay, no big changes in the setup. Already time is 9:42. So as of now, slowly we are getting the spike. Usually what happens, by 9:35 only you will get profit, or 9:40 you will get profit. So by then, if it reaches 120 zone whatsoever, you might have to close the trade. Now though it is 9:43, still market only now it has come to the profit situation. Now how would the market sustain all of those things post 9:45? You should not think. As per the rule, at 9:45 you have to exit. But sometimes, let's say you are in profit situation and you're okay to take the risk, then from 160 level you can get down your stop loss to as much as possible. Let's say you, in this case I get it to the previous candle 175. Okay, so from here, if trend continues, I will capture good moment. In case not, I will exit the trade without thinking too much. Okay, I hope you're getting the clarity. We have not got very big premium movement. Just as of now, if you have entered at 180, 190, 10 points profit you have got. Now simply what you will do, you will trail your stop loss to the maximum. At whatever price you want, you can exit. Since target is 220, market is going as per the view. You want to hold means you can hold. In this case, maximum from 20 points risk, we have reduced it to 5 points. At any time we want, we can book. But those who want to stick to the target, I'm just saying this is one of the situation which you can follow. If you have entered at 180, market has reached close to 200. So 20 points profit already you have got. You want to trail the stop loss to cost, or you leave it as it is entirely up to you. When you're seeing market at 9:45, market is not showing any positiveness, or 50%, 60% of your stop loss already the market has taken. That time maybe you can decide not to hold on to the trade and things like that. So profit had gone close to 5,000 rupees also. Basically we should have at least closed the trade when around 9:45, but just holding on to the trade, what happens by reducing the risk, that is what I'm trying to demonstrate to you guys here. It is time as of now is almost 9:50 a.m. As of now, net to net, this strategy has just given us today 1:1 profit itself. By this time you should have trailed the stop loss to cost, so that today it just becomes a risk-free trade for you. So what I would suggest you to do is trail the stop loss, okay, to 180 zone. So this becomes completely a risk-free trade. Traders time now is 9:53. Basically at 9:45 itself, whatever profit we got or whatever level market is, without thinking too much, as per the rule we need to exit. This I'm saying for beginners. Okay, people who wants to hold on to the trade, simply what we have done here, we have trailed the stop loss to almost cost here, 180 zone. So this becomes a risk-free trade. If it is a risk-free trade, you're holding on to the trade. then to a certain extent your capital is protected. Like this trailing you can do. This is one of the situation. But the initial stage, I would suggest people to book whatever profit is there around 9:45. But when you keep doing the back test, right, when you get the direction right, most of the time what will happen, easily market will give you the target that you want. So you have to just wait and see, but at the same time you cannot keep your stop loss at 160. You have to get it to, in this case you see I got it to 180 zone, so that this becomes a safe trade for us. Market has taken its own sweet time to reach the target zone. So 220 is basically our target area, but since we are holding on to this trade for too long, you can trail the stop loss so that it will become a profitable trade for you. After this, if market sustains the upper level, fine. If not, we have trailed the stop loss to maximum, so we will book that and go. For many people, what I will suggest is, okay, switch to 1 minute time frame, and simply you can keep trailing the stop loss to the previous candles like this, and you can go. If this candle goes above 220, you can get your stop loss here like that. When you do, maybe to a certain extent, whatever profit you have made, you will be able to hold it. Time now is 9:56, another 4 minutes for this candle to close. So here you can take a call. Okay, market has reached 90% of my target, only 4 points pending. Should I exit or not? That you can decide. Now in this case, you can see this candle is there. Market is trading little above that candle itself. What I will do, I'll trail my stop loss below this previous candle. So no matter what, I will be getting around 31 points in this trade. If market sustains above this level, fine. If not, no. Almost 220 market reached, so we will trail the stop loss to this candle. So by now target has achieved. Sometimes market takes more time. As per the strategy, you guys know, right, 220 is the target zone. We will fix that zone right now. So next, market has given support to 225, so you trail your stop loss little higher. Just modify that and go. Almost market has come to our trailing stop loss area. It's not yet hit, so if it hits, we will exit. As of now, for 300 quantity, we are at 13,000 profit. That is fine. Now, if markets gives a breakout above this zone, then what we will do, we will trail our stop loss little more. So target was 220, but we have got 240 also. Now you can see market is continuing towards the upside. Now, how much ever, maybe 50% of this, we can trail the stop loss and keep. This is a big candle, right? What usually you can do is this candle, whichever breakout candle is there, little near 618, little below 618 level, if you place the stop loss, then in case there is a pullback also, still you will be in this trade. As of now, this is just going. Simply what we will do, we will trail the stop loss little more. Now what happened? The stop loss got triggered in this trade, so this order got closed. So the profit what we made was around 17,000. Target was around 220, but market gave movement up to 240, 245 also. I hope you have got a basic idea of how this strategy works. Let's say you had kept the stop loss near 618 level, then stop loss wouldn't have hit. If continuation would have happened, additional movement you would have been able to capture. This is a good scenario where we made good profit. But as per the strategy, if you stick to 9:45 a.m., based on that you do back test. Okay. After that you close the trade and keep looking at the market. How many times after 9:45 additional movement it will give? Most of the time you will be capturing, like I said, right, 60 points, 100 points also in the strategy when your position is right and market trend also is right. But charts and all we should not be looking at that much. I hope you have understanding this. Now traders, I hope you have understood the potential of this strategy. Now my suggestion to each and every one of you is, from my end I've given you the strategy. Not necessary that you have to trust me. All you have to do is backtest this strategy for minimum 1 month. Based on that results, if you really want to put your hard-earned money in the strategy or not, that you decide. 1 or 2 days continuous losses you can make. That time you should not get disappointed. You have to do the backtest for 1 whole month, put it in an Excel sheet, see the results, then you come to a decision. Going forward, many examples related to this strategy I will give you, so you don't have to worry about that. So I hope this live market example was useful for you. Backtest, and in the comment section let me know after 1 month what kind of results you got with this strategy. More videos related to the strategy. There might be some complications related to the strategy. For example, let's say when you're looking at the strike prices, right, very closely both the strike price will be moving. One will be at 178, one will be at 179. You are closely watching the strike price. Whichever breaks 180 zone, immediately in that you have to enter. Okay, stop loss is 20 points, which is at 160. Target is 220. So 1:2 risk reward is the thing for this trade. I hope this video was useful. If you enjoyed this content, support the channel by liking the video. If you want more examples, more live trades that I take based on the strategy, also let me know, so that you will also come across different scenario. And also, if you wish, I can make a playlist of the strategy where I take all the trades, all the profits, all the loss based on the strategy. I will put it in one particular playlist, maybe 10 to 15 videos that might be useful for you. That is about the trade traders, and that's it.